Nigeria experienced its deepest recession in 2 decades, but growth resumed in 2021. As pandemic restrictions were eased, oil prices recovered, and the authorities implemented policies to counter the economic shock. However, the gradual recovery of the Nigerian economy from recession and the impact of COVID-19 pandemic in the country have been a source of hope, and worry to Nigerians, indicating that the economy would soon be out of the woods. Well, according to the National Bureau of Statistics, Nigeria's gross domestic product GDP growth rate slowed to 4.03% in the third quarter of the year, compared to 5.01% in the preceding quarter. Notwithstanding the positive growth recorded in successive quarters, analysts believe that the potential of the economy is grossly untapped, largely due to worrisome security situation in the country, which continues to deter the required investments to propel the economy to greater heights. Well, to help us understand this performance of the Nigerian economy in the year 2021, of course, to break all of this down, I have joining me, he is the Chief Consultant at Adedipe Associates Limited, Dr. Biodun Adedipe. Good afternoon, Dr. Adedipe, and it's good to have you join us today.
Thank you, Tolu. Good afternoon. It's my pleasure to be here, and thank you for having me.
Yes, I would like to start on the note that the last paragraph of the story I read before getting to this interview, talking about what we've seen in 2021. A lot of ups and downs, from COVID to a little bit out of COVID. Well, Omicron is there now, and there's another one we have to grapple with at the moment with the ban and all of that. But let's do an overview. In your understanding, how well both the fiscal side and the monetary side, how well have they been able to manage the situation?
Thank you so very much for that. My first comment here would be that the fiscal and monetary authorities have done fairly well. In fact, I would say the decisions, actions taken have been generally in the right direction. And so, to that extent also, we can make reference to a couple of, macroeconomic statistics and other pointers to the economy in the near future than where we are today. And that talks to the majors we always refer to, which of course relate to inflation rate, even the exchange value of the naira, as tortuous as that has been in the year. We also talk about even the unemployment rate, which of course we don't have a recent data on that, but of course in terms of specific actions and things that are needed to be done, typically in terms of economic management to address unemployment. I think all of those that are doing between the fiscal and monetary to strengthen the real sector and do all it is required to make them grow in a sustained, sustainable manner, and eventually make the growth inclusive, are all pointing in the right direction. That between the fiscal and monetary authorities, they have taken actions that I believe as an economist that are in the right direction, looking at the challenges that the economy is facing. But I want to also put this in context, and that is to recognize what is happening globally. Right now, we started the year on a tentative note because we barely passed that of recession at the end of 2020. And so what we were looking forward to is an economy to grow and grow very quickly. Yeah, growth in the first quarter of this year was quite tepid. The second quarter, the economy grew strongly as rightly said earlier on, which was to be expected anyway. But all of these point in a particular direction when you look at the trajectory, that trajectory says that if we continue at 3% growth of the GDP, now what does that imply for us? And this is a very important message to pass across to every Nigerian economic stakeholder. That will make it the first time in about 10 to 11 years that our economy will be growing at a rate faster than the rate of growth of our population. And that is a change in the dynamic or about what is actually happening globally and also impacting. Now, there's an expectation that COVID-19 has come on the scene. But the trajectory for that also is that there is a likelihood 2022, the COVID-19 pandemic might turn and become endemic. Because as more people are vaccinated, there might not really be a need for any lockdown of the economy. Then we can now begin to talk about the challenges going beyond this year of trickle down. But for this year, all the macroeconomic statistics, major ones, as I said earlier, are all trending in the right direction. Inflation rate is coming down, but of course, no, not coming down as rapidly as we would have wanted. We also look at the exchange value of the naira. Okay, monetary authorities took some decisions, followed with actions, but whichever way we want to evaluate that, because economists will always disagree anyway. But the point really is that at the roadside, the exchange value of the naira is not exactly the same as what it was when the central bank took that courageous step. All right, so it's about now trying to correct every aspect of our economy that has had challenges. Then we move on from there and then look at interest rate. Yes, it is still double digit, quite all right, which means the cost of borrowing is still high. But even at that also, if we take a cue from the central bank's monetary policy rate, which reflects what the central bank is putting out as a signal to the banks, that again has remained stable at 11.5% over almost the entire year so far. So which means also, in my interpretation, it's a correct reading of the economy and what it means. It's an economy that needs to grow. We might likely call that desperation for growth. And when you are desperate for growth, the expectation for the monetary authorities is that the signal rate, which is the monetary policy rate, will not be raised. And so far, central bank has done that. For me, that's a step in the right direction. Keeping other reserve requirements for the banks within the same range that they had since the beginning of the year is also a step in the right direction for the monetary authorities. But even more importantly, is the intervention in very important sectors of the economy, especially those that have to do with the real sector, where tangible goods and services are produced. All of those also, for me, are in the right direction. And that is why the economy has been able to get some measure of stability and also begin to grow in a very, modest way. So I think all of these are in the right direction.
Very good way to break this down, Dr. Adedipe. Now, the network challenges here, but we'll just try to way through and at least make more sense of this discussion. Now, when we talk about inflation and some of these figures that we see from the NBS, there are some factors that are actually worrisome to me, and I would like to identify them. The persistent food supply shocks is one of it. Foreign exchange liquidity, you've touched on that too. Higher energy costs and the planned removal of subsidy. If all of this happens, where do we stand, Dr. Adedipe?
Thank you very much. Now, it's managing all these issues is like a catch-22 situation. And there is what we say in economic policy formulation, that there are occasions you have to trade off. But when you trade off, let me use a very simple one to illustrate. Now, generally, everyone wants to enjoy low prices of commodities, which means keep prices stable, in which case inflation is as low as possible and maybe even disappear altogether in the conversation. But you look at the side of growth. If you want to grow, there's some measure of inflationary pressures that accompany growth. So in which case, you find a trade-off between those two. So the challenge always is, you want growth on the one hand, but you're also afraid of inflation. That is a kind of dilemma that the central banks always have to deal with. Okay, so in trying to therefore control inflation, you find that you can also hamper growth. So if you want growth, you should be able to accept that you want to live with some measure of inflation, but in what direction? Now, you made reference to food shock, and of course, we can see a supply shock, which of course, again, shows in the food inflation, which is the major thing there in our inflation today in Nigeria, because the core inflation itself is coming down, but food inflation is very sluggish. And if I might say, it is even sticky, okay, sticky downwards, which means it is fighting the push to come down. So in which case, the only way to deal with that will be to improve significantly the supply of food. And I think also that somehow Nigeria is moving in that direction, looking at the emphasis, for example, on cultivation and processing of rice, which indeed is a staple today in Nigeria, unlike the days when we were very young, that rice was not a staple food in Nigeria. So if we are putting more emphasis on that and pouring more resources into that as well, it means, in essence, that we are making efforts to fight that particular challenge. Now, the other side to it is how about other foodstuffs, which means if you look at the food basket in Nigeria, what are the items in there? There are several others aside from rice. So those other ones, what is happening in terms of their cultivation? What is happening to them in terms of harvest? What is happening in terms of processing, storage, and transfer to the market? And that is where we have some challenge in terms of moving the goods through our roads. And of course, in terms of even those peasants, we call them peasant farmers, or we call them in the modern language, smallholder farmers. Now, to what extent can they still cultivate and bring their harvest to the market? That's a challenge area for Nigeria. Now, you made reference, yes, I talked about FX liquidity earlier on, but a major challenge to us, and it has been like that for maybe a couple of decades now, up to 3-4 decades, and that is energy cost. Okay? Now, when it comes to energy, this is the way it works, and I've always put it simply this way over the years. If we are unable to get sufficient power through the national grid, that means every business and every household, we have to produce and generate power for its own use. Now, when you do that, the cost is not only higher, because the lower the capacity, the more expensive per kilowatt hour. We've gone through that process before and profiled it, ratio 1:4, in terms of the smallest generator compared to the biggest and most efficient. So it is ratio 1:4. So which means the cost per kilowatt hour of a small generator is 4 times that of a big power generator. So when that on the one side, you then come to the area of the quality of the power itself, before you move on now and begin to talk also about aggregating that at the national level, and now looking at the environment, the impact of that on the environment, the heat that we produce, that is also influencing climate change in our environment. So it then means, as we have not really made much progress in terms of energy costs. In fact, I had a conversation this morning when we made a very quick comparison. We said, okay, there's an improvement in electricity generation and supply in a particular location in Lagos, which means power from the grid has improved, quite all right, okay? But what they pay as bill has also gone up, talking about the energy cost. And I asked this fellow, I said, can we also talk about the impact of that in the cost of your running your generator? How much do you spend on diesel? And he said there's no significant, difference, which means energy cost still remains high, despite the measured improvement in power from the grid. Then, of course, if we talk about removal of subsidy, and I want to sensitize Nigerians to this, the reality of removal of subsidy is that the price per unit of the item from which you remove subsidy is going to go up, which means you cannot escape the inflationary impact of that. So the question now will be, how do we prepare and also protect the most vulnerable. Now, I'm not saying just the vulnerable, but the most vulnerable, because that is the way you target economic policies. Certainly, some will be adversely affected. Some will also find us as an opportunity, a new one emerging, from which you can also create value in terms of products and services. So the issue now in terms for the policymakers is to look at that critically and ask the question, who are the most vulnerable? And now, most creatively, can we intervene to protect the most vulnerable without creating another window of abuse? And that's the real issue when it comes to subsidies. Nothing is wrong with subsidy, but it's about how do you apply that in order to deliver value to the ultimate beneficiaries. And that's been the challenge with Nigeria over the years.
Okay, let's wrap up this discussion. It's really getting very interesting, but time is not always on our side, especially when we're on television. The non-oil sector seems to be doing very good. I'm looking at 5.4%, the contribution of Q3. What more can be done so that we take advantage of this? Many will say Nigeria is already diversified. How well diversified are we?
Now, usually, I have a pie chart that I use in passing that information anytime I talk about the Nigerian economy. Now, when you look at the contribution by different sectors of the economy to our GDP, there's no doubt the data points out that the economy is diversified. But where the problem is that you see mining and quarry, as of September this year, contributing 7.7% to our GDP on the one hand, and then you look at our foreign trade data, and you see oil, let me call it hydrocarbons generally, contributing about 88.94% of our foreign trade in terms of earnings, which means in recent times, we seem to be now understanding it properly. Because like we say, just following the template of in the medical practice, first you diagnose, then you come up with a prognosis, and then you prescribe and then apply that medication. So the same thing goes this way. And what it says then is that if we are going to get this right, we must understand that whatever we generate from the oil sector, we should devote it into strengthening the non-oil sector. Now we can also see, like you said, the promise of that sector now driving the growth of our economy. If non-oil sector drives our economy, we can be assured of sustained and sustainable growth, which will also give us a window of opportunity to make that growth become inclusive. That, for me, is the direction to go. Focus on non-oil sector and let's grow that, and also give attention to export. What can we produce and sell to the rest of the world? Most of the time, we focus on imports. Even our traders, the mindset of a regular trader in Nigeria is, let me get anything from anywhere in the world, bring it in, I have a market readily I can sell to. That way we are making money on ourselves. We are not making money from other countries. So we must also begin to look at not only growing the non-oil sector, how do we strengthen that to connect with an export-led growth for the economy?
It's a good way to leave it there, Dr. Biodun Adedipe. Thank you so much. It's always interesting talking to you. I don't know how much time we can take. He's the Chief Consultant at Adedipe Associates Limited. Thank you so much, and do enjoy the rest of your day.
Thank you very much for having me, Tolu.